I remember the first time I realized trading was taking something from me. It wasn't a big loss. It wasn't a blown account. It was a normal trading day. I closed my laptop, and I couldn't relax. My mind was still in the market, replaying trades, questioning decisions. That's when I understood something. Trading doesn't just cost you money. It costs your focus, your emotional balance, and your sense of control. And no one warns you about that price. This video is about the real cost of trading, the one you pay long before you see results. Most people think the cost of trading shows up on the account statement, red numbers, drawdowns, losses. That's not where it starts. The real cost shows up earlier, before the money is gone. It shows up in how you think when the charts are closed. Before trading, my mind used to switch off easily. Work ended, life resumed. But once trading entered the picture, that boundary disappeared. Even on flat days, even on small losses, my attention stayed trapped in the market. Not because I wanted to trade more, but because my mind was trying to regain control. That's the first hidden cost of trading, mental bandwidth. You don't notice it at first. You tell yourself, I'm just focused, I'm just committed. But over time, focus turns into fixation, and fixation is exhausting. Trading demands decisions in an environment that gives you no certainty, and every unresolved decision leaves residue. Questions like, did I manage that trade correctly? Should I have exited earlier? What if I had held longer? Those questions don't end with the session. They follow you. This is where many traders get confused. They think they're failing because they're emotional. In reality, they're overloaded. The market isn't just testing your strategy, it's taxing your cognitive and emotional capacity, and no one talks about that. Here's the part most traders don't realize. If you can't manage this cost early, the mental drain, the constant replay, the need to feel in control, you will eventually try to compensate for it with behavior. Overtrading, forcing setups, revenge trading. Not because you're greedy, but because your mind wants relief. And that's when the cost finally shows up where everyone can see it, on the account. The market doesn't take your money first, it takes your clarity. There was a point in my trading journey when the losses stopped surprising me. What surprised me was how they started changing me. At first, I handled losses well. I told myself, it's part of the game, just another trade. And technically, that was true. But emotionally, something else was happening. On winning days, I felt sharp, focused, confident. I walked differently. I spoke differently. And on losing days, I didn't just lose money. I lost certainty. I started questioning decisions that were perfectly valid, not because the plan was wrong, but because the outcome hurt. And slowly, without noticing, my confidence stopped coming from execution and started coming from results. That's a dangerous shift, because results in trading are random in the short term, but your mind doesn't care about statistics, it cares about meaning. And I was giving meaning to outcomes. I remember one specific loss, nothing dramatic, a clean stop loss. I followed the plan exactly, but when the trade closed, I didn't feel calm. I felt exposed, as if the market had said, you're not as good as you think. That's when I realized something important. Losses weren't just financial events anymore, they were becoming personal. And the moment trading becomes personal, emotional stability disappears. I started noticing patterns. After a loss, I wanted to trade faster. I wanted to prove something. I wanted to get back to neutral. Not because I needed the money, because I needed emotional relief. That's how overtrading really begins. Not with greed, but with a quiet attempt to restore confidence, to feel capable again. And this is the cost most traders don't see coming. Trading doesn't just test your strategy, it tests your self-image. If you're not careful, your sense of worth starts fluctuating with your P&L. The market doesn't break your emotions, it reveals where they're already tied to outcomes. There was another cost I didn't see coming. It wasn't on the charts, it wasn't in my journal, it showed up in my relationships. At some point, I stopped talking about trading with people close to me, not because they didn't care, but because they didn't understand. How do you explain a losing day when it doesn't look like work? How do you explain drawdowns without sounding irresponsible? So I did what most traders do. I stayed quiet. On the outside, nothing looked wrong. I was still present, still showing up, but mentally I was somewhere else, running scenarios, replaying trades, thinking about what I should have done differently. Conversations started feeling distant, not because people changed, because my attention was divided. Part of me was always in the market, and the hardest part? You start feeling alone even when you're not, because trading is one of the few professions where your biggest struggles are invisible. No one sees the stress of uncertainty. No one feels the pressure of drawdowns. No one understands the weight of responsibility, so you carry it quietly. I remember being with people I cared about and realizing I wasn't fully there, not emotionally, not mentally, and that realization hit harder than any losing trade. This is where many traders lose balance. They don't lose relationships dramatically, they slowly withdraw. They protect others from their stress, but in doing so, they isolate themselves. Here's the uncomfortable truth. Trading demands emotional bandwidth, and if you give all of it to the market, there's not much left for people. Trading doesn't take people away from you, it takes your presence. And after a while, something else changes. Not how you feel about others, but how you see the future of trading itself. At some point, something quietly dies. Not your account, not your motivation, your illusions. When I first started trading, I had a picture in my head: freedom, flexibility, fast progress. I believed that if I worked hard enough, learned enough, tried enough, results would eventually catch up. That belief works in most areas of life. Trading doesn't care. The first illusion to die was the idea of fast money. Not because it's impossible, but because chasing speed creates pressure, and pressure creates mistakes. I realized that every time I rushed progress, I paid for it emotionally or financially, usually both. The second illusion was the belief that effort guarantees reward. I could do everything right and still lose. Clean entries, proper risk, perfect execution. Losses still happened. That was frustrating at first. Then it was humbling, and eventually it became freeing. Another illusion that had to go was the need to be right. I used to feel satisfaction from calling the market correctly, from seeing price do what I expected. But trading doesn't reward being right. It rewards managing uncertainty, and letting go of the need to be right was one of the most painful and necessary shifts I made. Then came the hardest illusion to kill: control. The belief that if I understood the market deeply enough, I could control outcomes. I couldn't. No one can. The moment I accepted that my trading became quieter, less reactive, less emotional, more boring, and more stable. This is where many traders quit. Not because they fail, but because the version of trading they imagined no longer exists. The fantasy dies, and only the work remains. The traders who survive are not the most talented. They're the ones who let the illusion die before it kills them. After the illusions die, something else takes their place. Acceptance. Not resignation, not giving up. Clarity. Successful traders don't accept more risk. They accept reality. They accept that losses are normal, not mistakes, not failures, just part of the structure. They stop asking, "Why did this trade lose?" and start asking, "Did I execute my process correctly?" That single shift changes everything. Successful traders accept boredom. They stop looking for excitement, because excitement usually means overtrading, forcing setups, breaking rules. Boredom means waiting, selectivity, consistency, and consistency is where stability is built. They accept that progress is uneven. There are weeks with nothing to show, months that feel stagnant, but they don't chase movement just to feel productive. They understand that doing nothing is sometimes the most profitable action. They accept emotional neutrality as a skill, not something you're born with, something you train, through structure, through rules, through limits, not through willpower. And maybe most importantly, successful traders accept responsibility without self-judgment. When they make mistakes, they correct them. They don't punish themselves, they don't spiral, they adjust and move on. Profit didn't change my trading, acceptance did. And once you understand what trading really costs and what it requires, the final question becomes unavoidable. So here's the real decision most people never make consciously. Not whether trading works, not whether it's profitable, but whether you're willing to pay the real cost. Trading will ask for your time, your attention, your emotional stability. It will challenge how you see yourself, how you handle uncertainty, how you respond when things don't go your way. And it will do all of that long before it ever rewards you financially. Some people hear this and feel discouraged. Others feel relief, because clarity is better than illusion. Trading is not good or bad, it's demanding. And for those who accept that demand, it can become sustainable. Not exciting, not glamorous, stable. If you choose this path, choose it with open eyes, not chasing freedom, not chasing fast results, but building the capacity to operate calmly in an uncertain environment. The market doesn't owe you success, but it will respect consistency when it's built on reality, not fantasy. And if this video helped you see trading differently, that was the point. Not to convince you, but to help you decide, honestly. Because the real cost of trading is paid either way. The only question is whether you're aware of it when you choose.